This is an interesting slide that we have here, and we spent several days putting this together, but you can see on the far right that our rents have gone up 20%, 15%, 20%, 20%. These are some pretty interesting stats here, and so you might want to come back to this slide if you have a home in these areas, so you can see how things are performing. One of the things that we encourage, if you do own rental property, in the Austin area, get with me about doing not only a market analysis for value, but a market analysis for your rents, because we're seeing some of the property managers are not increasing the rents as much as they should be, either by just being lazy and making it easy on themselves, or because they just don't know. So here's your annual employment growth for Austin, Texas, and the U.S. We are leading the nation. As I told you, #1 job growth in the nation. Here's your employment recovery from just a few short years ago. Here's your Texas population growth. We're looking like we're going to be doubling our population here within, well, it seems like it doubles every about every 15 years. So a lot of people moving here. Probably the #1 place people are moving to is in Texas. And Austin is a little bit different. Austin is a place that people want to move to in Texas. And a lot of good reasons why, mostly jobs, and that's going to continue because the companies keep moving here or expanding. And so this line is probably going to be a little steeper than what, can you tell us guys that we're trying to do a presentation here? Sorry about that. We have some people working in our office here, so I'm going to tell them to see if they can keep it down. So anyways, the Austin population groups. This is an interesting statistic here. We have baby boomers, or those are going to be your 47 to 65. Then you have your Gen Xers at 35 to 46. And look at the 16 to 34s, which is the largest population group that we have. Those are the Generation Y, they call it. And what we're seeing is that they have a tendency to, these days, is put off their home buying purchase a little bit longer, this Gen Y, and until they're a little bit older than the other generations that you see on this chart. So what that means is, with the largest population being in that range, we're going to see the largest amount of renters that we have. So always keeping our solid rental base to keep our rentals full. And homeownership rate really should be balanced out at about 63%, 64, 63%. This line here really is where it needs to be. So we're going to see homeownership rates decline. Again, a little more difficult in getting financing, but for a healthy market, it should be right here in between the 63, 64% and 65%. So once again, you're going to see more renters in the marketplace. Those that can buy will buy. And they'll be replaced by other renters that can't quite buy yet or don't want to. Okay, so take a look at the other metro areas. You know, Houston's doing pretty well, and as far as the Austin area, you can see over the years it's done very consistently. This is great. As your mortgage payments being paid off, your value is going up. Values double about every 15 years, plus or minus, in Austin area. So one of the things that we like to teach our clients is, if you just had a baby, go buy a house in Austin, put it on a 15-year loan. It'll probably be a break even, and in 15 years it should be worth double the value that you paid for it, and the loan will be paid off by the tenants, and now you have free and clear property that you could sell and put your kids through college.
The other thing about these charts is that Dallas, Houston, and San Antonio, on the charts, they're all capping out at about 160,000, whereas Austin's capping at 190.
Yeah, it's really the median price has gone up to about 210,000. The average price, which is the weighted average, is about 238,000. So, and the average price has gone up, according to Statesman, is 8% since the beginning of the year. So what that means is that we're seeing more of the higher priced homes are selling. So, okay, so take a look at this chart again, and this is a prediction. This is from the Texas A&M Real Estate University. Excuse me. So, you know, we're seeing that price increases, and so you got to get in now and take advantage of those price increases, because if prices have gone up 5 to 8% since the beginning of the year, if you put 20% down, you would have a huge return on your money, on your investment. Let's say you just put 10% down, you buy owner occupied, and it goes up, the value of the property goes up 5%. You've had a 50% increase in property value. I mean, in equity, 50% in 6 months increase in equity. Once again, look at the chart, nothing but going up, and that's going back to 1999. And if you take this chart back to the 70s, you would see the same thing. It's just pretty much a nice, steady, even growth. We want a steady, even growth. We don't like to have large peaks when you own real estate, large peaks and valleys, because that's not healthy for real estate investors. But in Austin, we've got nice stability. Our inventory is actually down to about 3 months right now. So if you caught this